Hi, I'm Tim Moffatt from Minc Trading, and today I'll be running through share purchase plans and how you can actually trade those to make some pretty decent returns on the stock market with what I'd like to consider some relatively low risk. Let's get straight into it. Now, what is a share purchase plan? Well, essentially a share purchase plan is a form of capital raising for the company. Now, there's many types of ways a company can raise capital, whether it's a share purchase plan, a rights issue, a placement to institutional shareholders. There's many ways a company can go about it. Share purchase plan is one that is particularly favourable for the retail or the mum and dad investor. Now, generally what a company would do to entice retail shareholders or mums and dads to participate in a share purchase plan is offer them a discount. So let's use the example, share price is trading at $10. They might offer the share purchase plan at $9, giving an effective 10% discount to the current market price. Now, share purchase plans these days give shareholders the right to apply for up to $15,000 of new shares. Now, it may not always be the case. It might be limited to $5,000 or $10,000, but these days $15,000 is pretty much the standard. Now, the SPP opportunity. Now, most investors, if they have a balanced portfolio of a number of stocks, have probably participated in a share purchase plan at some stage in the past. What most clients or investors don't realise is a lot of these share purchase plans you can actually access not being a prior shareholder. So, not all the time, but a lot of the time the company will actually give us a window of opportunity where we can become a shareholder in a company. And that'll give us the entitlement to participate in the share purchase plan opportunity. Just before we go any further forward, I'm just going to discuss some key terms and phrases we use when trading the SPP strategy. Now, the qualification parcel. Now, this is the parcel that we use to get into the SPP. Now, what we do is we buy the minimum parcel as defined by the ASX, which is $500. The ASX won't allow us to buy any less than $500, so we're going by $500 of the stock that's conducting the SPP, and that'll give us the entitlement to participate. Now, we have to buy those shares 4 trade days before the record date for the SPP. There's a little bit of a trick for young players, but because of the way shares settle on the ASX on a T+3 basis or trade day plus 3 days, you have to buy 4 days before the record date, and that'll mean you're a shareholder on the record date and eligible to participate in the SPP. So the last day to buy, obviously 4 days before the record date. Now, just be aware you're going to get an application form if you are entitled to the SPP that outlines how you apply for your new shares, your new $15,000 worth at that discounted price, and an offer close day. That's the last day you can apply for those $15,000 through that SPP form. And finally, what we call the allocation date, which is the day that we actually get allocated our new shares and they become available for sale. Now, a couple of steps in the SPP trading process. Obviously, first step, we buy $500 before or on the last day to buy. What we can do after that day is actually sell out that $500, so we have no shareholding in the company, no exposure, but we still hold that entitlement. We still have the right to buy another $15,000 at that discounted price. Now, if there's enough of a discount before the application's close date, usually we look for at least 10% discount. We're obviously going to apply for our new shares, whether it's $10,000, $15,000, we're going to apply for them, send our check off or BPay. Those details are on the application form, and effectively from that moment that you pay for those shares, it's just like buying stock on the market. You own them. The company's not obliged to give you the whole amount, but you basically, if you buy 10 grand's worth, I would consider that you're going to get the 10,000. So don't assume that you're not going to get that whole amount. They certainly will allocate it to you if they would like. And after the stock is allocated to your account, obviously we sell that on market and try and take that 10% discount as our profit. Now, a lot can happen between now and then, but the share price could come back to break even. It could also go up another 10% and give us 20% profit. You've got to take a little bit of stock risk at some stage, but you have got that buffer there. You're buying at a 10% discount to the market initially. Okay, the SPP strategy, highly profitable through 2009. Through the latter half of 2009, not so much. A lot of the discounts that they were offering early in the year because cash was hard to come by during the GFC. But there certainly is opportunities out there, and they will continue to present themselves over time. At the moment, they've dried up a little bit, but that certainly means doesn't mean that we're going to stop looking for them. We'll keep our radar out there, and we'll let our clients know when they come along. If you're interested in receiving trade recommendations or want a little bit more information about how to trade a share purchase plan, contact the desk on 1300 610 024 or send an email to trading@thinkminc.com.au.